Hi everyone, we had a big announcement yesterday where Sdfc Limited is going to merge with Hdfc Bank. Now after the news, the stock price of both Sdfc Limited and Hdfc Bank jumped more than 10%. Now Sdfc Group is a big financial conglomerate with various entities. So in this video, I have tried to explain the Sdfc Group and its companies, then why Sdfc Limited got merged with Hdfc Bank and the impact of the merger. Alright, let's get started. Sdfc Group is one of the largest and the most respected business houses in India. Sdfc stands for Housing Development Finance Corporation. The journey of Sdfc Group started way back in 1977 when Sdfc Limited was established as the first specialized mortgage company in India. The business was to provide loans to individuals, corporations and developers for the purchase, construction and development of houses, apartments and commercial properties in India. So Sdfc Limited has been the pioneer of housing finance in India. While housing finance was the core business of the company, over the years Sdfc Group has grown into a large financial conglomerate with diversified business. During 1990s, when the Indian government issued the first set of banking licenses to private sector, Sdfc Limited applied for banking license under the name Sdfc Bank. And that's how Sdfc Bank was established in 1995 under the leadership of Mr. Deepak Parekh. He set up the team for Sdfc Bank led by Mr. Aditya Puri that eventually became India's largest private sector bank. Eventually, the group established many other financial companies including your Hdfc Life in insurance sector that again became the largest private sector insurance company in India. Then Hdfc AMC that is among the top 3 largest asset management companies in India. Then Sdfc Ergo in general insurance, and then many other subsidiaries like your Sdfc Credila, Sdfc Pension and so on. Today, Sdfc Group companies are among the leaders in their respective sectors and some of its public traded companies command a huge market cap. For example, Sdfc Limited has a market cap of around 4.75 lakh crore rupees. Then Sdfc Bank has a market cap of around 9 lakh crore rupees. Sdfc Life has a market cap of around 1.2 lakh crore rupees and Sdfc AMC has a market cap of around 50,000 crore rupees. So overall, the total market cap of listed companies of Sdfc Group is over 15 lakh crore rupees. Now as far as the group structure is concerned, before the announcement of merger of Sdfc Limited into Sdfc Bank, Sdfc Limited was the parent company of all Sdfc Group of companies. For example, Sdfc Limited held 25.8% shareholding in Sdfc Bank, 49.97% shareholding in Sdfc Life, 52.62% shareholding in Sdfc AMC, 50% shareholding in Sdfc Ergo and so on. I hope now you got a good understanding of various companies within Sdfc Group and their present structure. Now let us try to understand the reason behind the merger of Sdfc Limited into Sdfc Bank. Before we even discuss the reason for merger, you should clearly understand the business of Sdfc Limited and Sdfc Bank. So Sdfc Limited is a housing finance company which is essentially an NBFC, that is non-banking financial company, whereas Sdfc Bank is a full-fledged bank. Now in India, we have different rules from RBI for NBFC and banks. For example, one of the rules is that NBFCs can't take deposits whereas banks can take deposits. Now understand this. Essentially, both Sdfc Limited and Sdfc Banks are in the business of giving loans. And in order to provide loans, they have to raise money. So for banks, it's pretty simple. Banks can take deposits. For example, retail people like you and me keep our money in saving account, current account, FD, etc. And that is deposits. And banks can pass on that money as loan at higher interest rate. However, NBFCs can't take that deposit in the form of saving account, FD, etc. Hence, they raise capital via bonds. In this entire process, the cost of borrowing of banks is much lower than NBFCs. For example, banks give an interest of somewhere around 3% on saving account and current account interest rate is 0%. So you don't get any interest on current account. Hence, the cost of capital is much lower for banks with current account and saving account, also known as CASA, and compared to NBFCs where they end up raising money in the range of 6 to 7%, and that too for the top quality NBFC like Sdfc Limited. This cost of borrowing raises further as the quality of NBFC decreases. Hence, the entire idea behind the merger was to ensure that when Sdfc Limited would get merged with Hdfc Bank, it would have access to capital at much lower cost because now it would be a part of the bank. Also recently, RBI has hinted towards new regulation for NBFCs that would be even more stricter and that would make the lending by NBFCs more difficult. Hence, considering the stricter guideline and the scope of growth, SDFC Group decided to merge Sdfc Limited with Hdfc Bank. Let me share a video clip of Mr. Deepak Parekh after the announcement of merger.
During the last 3 weeks, over the years, the Reserve Bank of India is coming out with regulating NBFCs, and housing finance is an NBFC. The regulatory changes are similar to banks, like the liquidity coverage ratio, which was not there earlier. NPA classification was not there earlier. We have to classify a loan as NPA on the same basis as a bank. Then over the years, the liquidity requirement and the SLR and CRR has come down from 28 to 22%. Today, interest rates are low. Today, liquidity is there in the market. Today, housing is a boom area. And the amount of loans we are getting per month is over 80,000 in 1 month. And you need a banking model to take care of it, because the debt market in India is not yet so developed. The loan application, we got a 35,000 crores this month in March. So you need a larger base, and you need deposits, and you need current account with zero interest. You need a lower cost of funds.
So Mr. Parekh is clearly saying that RBI is coming up with regulatory changes with NBFCs, and that would be similar to banks. It would include liquidity coverage ratio, NPA classification, where now NBFCs would have to classify the loans as NPA on the same basis as banks, and so on. And he's saying the housing sector is on boom and they are getting huge amount of loan requests, and it requires a banking model to take care of that, as the debt market in India is not that matured. Hence, you need the larger capital base with saving account and current account with 0% interest rate, so that the cost of fund comes down for them, and that would directly benefit the SDFC Group. After the merger of SDFC Limited into SDFC Bank, SDFC Bank would have a market cap of close to 14 to 15 lakh crore, and that would make it the third largest listed company in India after Reliance and TCS. In fact, SDFC Bank can even become the second largest company in terms of market cap. If you look at the balance sheet, the combined balance sheet after the merger would be 18 lakh crore rupees. And as far as the existing investors are concerned, the existing investor of SDFC Limited will get 42 shares of SDFC Bank for every 25 shares of SDFC Limited. An existing shareholder of SDFC Limited would own 41% holding in SDFC Bank. So SDFC Bank would not have any promoter holding. It would be 100% owned by public FIIs and DIIs. So in this video, we discussed the merger of SDFC Limited with SDFC Bank and its impact. After starting operation in 1977, that is after 45 years, finally the parent company SDFC Limited would merge into its subsidiary SDFC Bank. So basically, now the son will take over the business of the father. As far as investment is concerned, I have been a big admirer of SDFC Group and its leadership. And I am also invested in SDFC Bank. In fact, I recommended SDFC Bank in one of the recent videos on top 5 blue chip stock to buy now. Unfortunately, SDFC Bank had been an underperformer for a long time. In fact, in the last 1 year, SDFC Bank share price had fallen by 8%. Also in October 2020, RBI imposed ban on SDFC Bank to issue new credit card and introducing new digital products due to multiple outages in its digital banking system. This ban lasted 8 months till August 2021. It also impacted its growth in credit card business. Then it also saw a big change in leadership, where Aditya Puri, the man behind SDFC Bank, becoming the #1 private company of India, retired in 2020. So overall, it was a dull phase for SDFC Bank. But I was always confident on SDFC Bank and its future growth prospect. After the news on the merger, SDFC Bank jumped nearly 12%, and now currently it is trading at levels of 1600 rupee. In fact, every brokerage house is bullish on SDFC Bank. CLSA has set a target of rupees 2025. Citibank targets are rupees 2000, Morgan Stanley targets are 1800, Motilal Oswal has a target of rupees 2000. So all brokerage houses are bullish on SDFC Bank. I'm sure that after this merger, SDFC Bank will emerge even stronger. But please note that this merger will take somewhere around 12 to 18 months to complete. So what is your take on this merger? Let me know in the comments. I hope you will find this video useful. I'll see you in next video. Till then, take care.